We have some huge news coming from IPOE SPAC, and that is the Choma SPAC, and they are merging with Sofi, set to merge on May 27th. So we're going to go over a little bit about the company. We're not going to go too far in depth about that. We're going to go over my trade as well as the technical analysis and give you guys my rundown about what I think is going to happen up until the merger, after the merger, and how I plan to trade this. Now, I do want to tell you guys right off the bat that they have an over 30% short interest, and they popped over 14% today. So we could start a short squeeze in this company now that it is more official and we have an actual confirmation date of the merger that they will actually switch to Sofi. So with that being said, my name is Tyler. If you guys get anything out of this video, make sure to hit that like button, subscribe to the channel, and once I hit 1,000 subscribers, which is only about 100 away, I will be starting a YouTube portfolio where I deposit $50 a week, 60% into growth stocks, 40% into dividends, with a little bit of crypto here and there. Track the growth on this channel for the everyday average investor. So if you guys want to be a part of that and stay up to date on the latest trades once we make that portfolio, hit that subscribe button and the notification bell. I do greatly appreciate it. And with that, let's get into it. So like I said earlier, we popped 14%, a little bit over 14% today. At the lowest point of the day, we were actually negative, breaking under the $15 mark. And then once this news was confirmed, we ran all the way up to $17.10, and that is where we closed. And now, as to the news, as to what everybody that has been investing in this SPAC has been waiting for, and I have been a long-term investor in this for quite a while, but I do see a significant trade here as well. So the news: Chamath Papaya's SPAC Social Capital popped 12% after a tweet announcing vote on Sofi deal is scheduled for May 27th. Sofi Investor Relations tweet that the S4 of the SPAC is effective with the SEC, and proxy statements will be mailed to shareholders ahead of May 27th meeting. The deal is expected to close on May 27th, and trading will start June 1st. So this is a lot sooner than I think a lot of people had anticipated, and that is also good considering we caught the shorts off guard with over a 30% short interest, which we will get into that more later into the video. Now, IPOE announced early January that it would take Sofi public at a $8.65 billion valuation. Papaya sponsored special purpose acquisition companies have already taken companies including Open Door and Clover Health Investment public via mergers. Says IPOE short interest, 30% of float. And we're going to look at the short volume ratio because I am very curious as to what happened today. I'm not sure if that information will actually be available right now. You might have to check back in later, and I will link that in the description once we get to it so you know where to find it later after this video is posted, if it is not posted already. Late yesterday, Dan Loeb's hedge fund, Third Point, listed Sofi as one of the top 5 winners in Q1 for its fund. And like I said, I've been a long-time investor in Sofi, and I really do like the company, so we're going to get into that right now. Now, this is the investor presentation that Sofi put together once this merger was actually announced. And this, the CEO, he worked for Twitter, NFL, Goldman Sachs, and pretty much everybody on here has substantial experience at big businesses, like some of the biggest businesses: Amazon, Microsoft, JP Morgan, Toyota, Citi, Tesla, Stryker, P&G, Intuit, Zynga, Amazon, TPG, Goldman Sachs. So basically everybody has a lot of experiences on this team, a well-diversified experience portfolio, as you would say, among the group of them. And now on track to exceed 3 million members in 2021, up 75% after 6 consecutive quarters of accelerating year-over-year growth. And as of today, when they posted this was probably about 6 months ago. I'm not sure the exact date at this second, but they were at 1,718,000, and they expect to be at 3 million by the end of 2021. So that is very substantial growth. Even if they did, for whatever reason, not hit that $3 million mark, that would still be very exceptional growth. This says 75% year over year. As far as nearly doubling our multimedia product members to 775,000. That's all good there. I want to get into how they actually make their money, because they are a well-diversified app, and it's basically a one-stop shop for anybody that gets loans. Student loan refinancing is what they really got popular for, but car loans, you can now invest with Sofi, which is going to be huge going into the future, and they actually expect that to be their biggest source of revenue in 2025, 2026. So that is really good. I think that is all on the up and up. And it says our 3 business segments: lending, student loan refinancing personal loans, home loans, in-school loans, technology platform, Galileo, and then 1/6 ownership of Apex Clearing. If you guys know anything about that, that is the situation with Robinhood. Back, it feels like forever ago, but with the GameStop stuff and Apex Clearing, that they own 1/6 of that. And Galileo is basically a technology that facilitates a lot of these payment processes. So you guys should definitely read more about that. I don't really want to go into that. I want to go into how this company projects its growth going into the future, because I think at an $8 billion valuation, you really can't go wrong buying this stock, especially at these prices. In financial services, invest, money, credit card, lantern, relay, and protect, like credit backgrounds, and make sure your credit stays good, all that stuff. Pretty much the most important thing, the thing that I care most about especially, is their revenue going into the future, right? You need a company that is going to be making money and making a profit sometime in the future. They don't have to right now. Obviously, they're growth companies. They're investing quite rapidly, but you do expect this to at some point get there. So their 2020 end of year adjusted net revenue composition was 17% for the tech platform at $103 million. 83% came from lending at $514 million, and 2% came from financial services at $11 million. And this is absolutely mind-blowing. What they project for end of 2025 adjusted net revenue composition is 32%, or $1.2 billion from its financial services, growing from $11 million to $1.2 billion in 5 years. That is absolutely impressive growth. Even if they did half of that, this stock would still be a steal. I just want to tell you guys that. But lending is going to be at 43%, or $1.6 billion. And then the tech platform will be 25% at $911 million. So these are very substantial numbers right here. And obviously this is good to see that its core business is actually shrinking, because this is not going to be their most profitable business sector. When everything's all said and done, the tech, the investing, that stuff is going to be the most profitable sector of their business for the long term. Now, let's take a look at what kind of balance sheet they're going to have after this merger. And cash to the balance sheet, $1.9 billion. In the total uses, they will get $2.4 billion. So they will almost have $2 billion on their balance sheet, including the cash that they already have. It'll be about $2 billion on their balance sheet. IPOE public shareholders get 9.3% of the company. All good there. Not too much to be really concerned about. Pipe raise at $10. Yeah, nothing too crazy there. GAAP net income by 2025 would be $635 million. In millions. So $635 million in total profit by 2025. So that is looking very, very good. They expect to turn a profit by, by 2023 end of year, a $200 million profit. So that is pretty good considering a growth stock that is expected to grow so rapidly. We're talking 150% for the investing segment of their business, 153%, 55% on their technology platform Galileo with a 62% margin, and for their lending at 25% compound annual growth rate. So the growth looks good. The future prospects of the business looks good. They're in a very much growing sector, and for an app that you can do a lot of, basically everything you need to do as far as track your credit score, investing, banking, loans, everything, they have it in this one-stop shop. And I know a lot of younger people are going to like this, and that is one big reason why I took a long-term stake in Sofi. So as we said previously, our short interest as of April 15th is at 30.58%, and this is highly, highly elevated. I would be surprised if we don't go to at least $25 to $30 per share in the near term. Now, I don't expect us to actually stay at that point forever. We're obviously going to have a pullback after that short squeeze. So I'm just telling you guys to let you guys know this up front, that we're going to go up rapidly. We're going to short squeeze. That's going to happen. This was the exact news. We needed a confirmation date on this merger for people to start buying in and taking this more seriously. Since we've had the SPAC attack, as you will call it, a lot of people want to stay away from SPACs, but now it is hard to deny because they have a merger date, a set date they will start to trade. So that is very, very important when it comes to SPACs. And as far as the other website that I like to use, because that was MarketBeat, I like to use Fintel, and I use this in most videos. This is the short volume ratio per day. So as of yesterday, we were at 18%, and that does make you wonder, comparing the rest of the days that we're going to look at, if some of these insiders or people that would be shorting the stock, big money institutions, knew about this confirmation before we did. So that is quite weird. I don't know what to think about that, but we had 18% yesterday, 31% the day before, 25, 20, 36, 26, 28, 22, 16, and 17. So that is pretty much in line with the 30%, maybe a little bit lower by now, but that data does seem to be pretty accurate, and it should be updating anytime soon. I believe it updates twice a month, so we should be getting an update fairly shortly. But either way, if it's 25 to 30%, that will still cause a major short squeeze, and I do think there is a significant trade to be made here. Now, as to the trade that I made today, my overall position, SoFi is 7.73% of my total account, so I do have a high level of confidence in the stock. I use their product. I like their product. I have not tried out their investing platform, which I plan to, but I just haven't got around to doing it. But my average cost is $19.50. I'm down 12%. I have 110 shares, and I actually did something interesting, which is kind of stupid looking back at it. But before the merger was actually announced, I wanted to free up capital because I didn't expect this to be announced, obviously, today. So I sold a covered call. I collected $110. I sold a $25 call for January 2022. And I am down 31% or $35, but I own the shares. I gave up the right to sell those shares at $25. So it's a win-win for me either way. If I get assigned to this, I am more than happy to sell the shares and buy them back at a cheaper date. Or if SoFi falls, then I will just buy back the short contract and keep my shares. That's really what I plan to do. Now, as far as the trade that I made today, I do think this is going to short squeeze, but I didn't want to spend too much, and I wanted to be quick to get my initial investment back, because I did not have a day trade left for the day, so I couldn't open and close an option position, and I didn't know exactly how investors were going to take this. Obviously, I knew it was positive, but I didn't have time to take a look at the short interest or any of the other factors that we have talked about in this video. So I bought a $20 call for 18 cents. I bought two of them, expiring May 21st. Now I am up 66%. At one point, I was up over 100% on these. They hit a high of 36 cents or $36. But what I did is I went to the option chain. I sold the 22.50, and basically a $2.50 difference between these contracts. My max gain if SoFi closes above $22.50 by May 21st is $500, hands down. Now, if they close under $22.50, I will lose money, but I can still close out of this position by doing the exact opposite. So if I sold 2 and it says -2, I would buy this, sell the one that I bought, total credit 13, so 2, I would come out to $26. But I did sell them back for, I think, an $8 loss. Yeah, I got $14 back. I spent $18 on them. So it was an $8 loss in total, but that was the best way I could come up with getting in and out of this position while keeping skin in the game, because $500 on a, $18, $30-some trade, that is not bad at all. But I did take an $8 initial loss, but it's not a loss because I still have, what is this, about $16, $13, $26 in this trade. So really, I didn't take a loss on this. Really, I'm only up $19, but I do think this will go in the money with this short squeeze, and that is when I plan to sell out, because even if I don't hold these until May 21st, even if SoFi goes over 22.50 in this time, the spread between these will widen a lot, so they will go to more of a reasonable value, probably a couple $100. That's just how it works. I'm hoping you guys know a little bit about this. If you follow the channel, you definitely know about this strategy. And then I would probably exit those positions during the short squeeze and take a couple $100 max profit, depending how high SoFi goes. They could go all the way to, probably $400 total, but I'll be happy with taking $200-300 total on this trade. I do think it will close in the money or over $22.50 by the time this happens because of the matter of this news. And since we were at about $25 and even, you know, around the $20 to $25 for such a long time until we got this overall SPAC sell-off and market correction, you could say, I do think we're going back to that range. Now, that is how I would trade it. I would be quick to get my initial investment back, especially in this wobbly market where, I mean, we could have a crash or correction any day. We're just overdue for one at this point, going up 100% in the stock market as a whole in the last year. That is how I would trade this, and that is what I am doing. Max profit $500. My max loss is nothing at this point. I mean, if I cash out this position Monday, I will still be net up on this trade about $20. So I have no loss on this trade. I played it small. I only put, you know, $36 in. Pretty much got my initial investment back, and that is how I would trade this if I were you guys. But this is not a recommendation. You could lose money on this. Don't blame me if you do. I'm just telling you guys the facts and presenting them to you. We went over tons of information in this video, and just to be clear here, my price target is in between $25 on the low end and $35 on the high end, considering we are going to short squeeze. As to what extent we are going to short squeeze, that is the question. With a little bit over 30% short interest, that could call for at least $30 to $35. So that is why I'm putting my price target right there and just being realistic with you guys. So if you guys got any useful information out of this video, hopefully you did. Like I said, we covered a lot in this video. Make sure to hit that like button, subscribe to the channel, be waiting for the YouTube portfolio. It is going to come out any day. I will see you guys in the next video. Take care.